Brought to you by WikiVidi.com. Income tax in India. The Constitution of India Schedule 7 Union List Entry 82 has given the power to the central government to levy a tax on any income other than agricultural income, which is defined in Section 10 of the Income Tax Act 1961. The income tax law consists of Income Tax Act 1961, Income Tax Rules 1962, notifications and circulars issued by Central Board of Direct Taxes, Annual Finance Acts, and judicial pronouncements by the Supreme Court and High Courts. The government imposes a tax on taxable income of all persons who are individuals, Hindu undivided families, companies, firms, LLP, association of persons, body of individuals, local authority, and any other artificial juridical person. Levy of tax on a person depends upon his residential status. The CBDT administers the Income Tax Department, which is a part of the Department of Revenue under the Ministry of Finance, Government of India. Income tax is a key source of funds that the government uses to fund its activities and serve the public. The Income Tax Department is the biggest revenue mobilizer for the government. The total tax revenues of the central government increased from in 1997-98 to in 2007-08. History. The Direct Taxes Code Bill was tabled in the Parliament on 30 August 2010 by the then Finance Minister to replace the Income Tax Act 1961 and Wealth Tax Act. The bill, however, could not go through and eventually lapsed after revocation of the Wealth Tax Act in 2015. Amnesty Scheme. Government of India allowed the people to declare their undisclosed incomes in Income Declaration Scheme 2016 and pay a total of 45% tax. For one-time settlement, 64,275 disclosures were made amounting to charge to income tax. For the assessment year 2016-17, individuals earning an income up to were exempt from income tax. About 1% of the national population, called the upper class, fall under the 30% slab. It grew 22% annually on average during 2010 to 0.58 million income taxpayers. The middle class, who fall under the 10% and 20% slabs, grew 7% annually on average to 2.78 million income taxpayers. Agricultural income. Agricultural income is exempt from taxes per Section 10 of the Act. Section 2 defines agricultural income as income partly agricultural and partly business activities. Income in respect of the below-mentioned activities is initially computed as if it is business income and after considering permissible deductions. Thereafter, 4,035, or 25% of the income as the case may be, is treated as business income, and the rest is treated as agricultural income. For apportionment of a composite business agricultural income other than the above mentioned, the market value of any agricultural produce raised by the assessee received by him as rent in kind and utilized as raw material in his business should be deducted. No further deduction is permissible in respect of any expenditure incurred by the assessee as a cultivator or receiver of rent in kind. Permissible deductions from gross total income. Ministry of Finance has notified certain deductions from gross total income of an assessee. Below are deductions as updated by Finance Act 2015. Due date of submission of return. The due date of submission of return shall be ascertained according to Section 139 of the Act as under, if the income of a salaried individual is less than 500,000 rupees and he has earned income through salary or interest or both. Such individuals are exempted from filing their income tax return provided that such payment has been received after the deduction of TDS and this person has not earned interest more than 10,000 rupees from all sources combined. Such a person should not have changed jobs in the financial year. CBDT has announced that all individual HUF taxpayers with income more than 500,000 rupees are required to file their income tax returns online. However, digital signatures won't be mandatory for such class of taxpayers. Advance tax. Under this scheme, every assessee is required to pay tax in a particular financial year preceding the assessment year on an estimated basis. However, if such estimated tax liability for an individual who is not above 60 years of age at any point of time during the previous year and does not conduct any business in the previous year, and the estimated tax liability is below 10,000 rupees, advance tax will not be payable. The due dates of payment of advance tax are: any default in payment of advance tax attracts interest under Section 234B, and any deferment of advance tax attracts interest under Section 234C. Tax deducted at source. The general rule is that the total income of an assessee for the previous year is taxable in the relevant assessment year. However, income tax is recovered from the assessee in the previous year itself by way of TDS. The relevant provisions therein are listed below. At what time tax has to be deducted at source, and some other specifications are subject to the above sections. In most cases, these payments shall not be deducted by an individual or an HUF if books of accounts are not required to be audited under the provisions of the Income Tax Act, 1961 in the immediately preceding financial year. In most cases, the tax deducted should be deposited within 7 days from the end of the month in which tax was deducted. Corporate income tax. For companies, income is taxed at a flat rate of 30% for Indian companies. Foreign companies pay income tax at the rate of 40%. An education cess of 3% are payable. From 2005-06, electronic filing of company returns is mandatory. Categories. There are 5 categories of income tax returns. In business, normal is any gained revenue that exceeds the cost, expenses and taxes needed to sustain the business or an activity. In case of failure to file the return on or before the due date, belated return can be filed before the expiry of 1 year from the end of the relevant assessment year. In case of any omission or any wrong statement mentioned in the normal return can be revised at any time before the expiry of 1 year from the end of the relevant assessment year. Assessing officer considers that the return is defective, he may intimate the defect. One has to rectify the defect within a period of 15 days from annual information return. Those who are responsible for registering and maintaining books of account or other documents containing a record of any specified financial transaction shall furnish an annual information return in Form number 61A. Statements by producers. Producers of a cinematographic film during the financial year shall prepare and deliver to the assessing officer a statement in the Form number 52A, whichever is earlier. Statements by non-resident having a liaison office in India. With effect from 1 June 2011, non-resident having a liaison office in India shall prepare and deliver a statement in Form number 49C to the assessing officer within 60 days from the end of such financial year. Appeals. When taxpayers dispute the income tax demands raised on them, a structured appeal process has to be followed. The first level of appeals lies with the CIT. The next level of appeal lies with the Income Tax Appellate Tribunal, an independent body, which is the final fact-finding authority. Courts can subsequently be approached by the aggrieved party only if a question of law is involved. Brought to you by WikiVidi.com. Would you like to know more?